All right, so in this video here, I'm going to walk you guys through an outside day reversal setup, what that means, and show you how to fade the entry on a stock that we were watching in the momentum monitor. The stock is Meta. You can see it on the screen. So we're just going to go step by step and explain to you the thought process behind this entire trade and how to manage it as you put the position on. So first and foremost, this is called an outside day reversal. Again, I'll explain this in just a moment. We use this from the momentum monitor, which I'll bring up in a second. And then we used the keynote here that it's 30 minutes until the European close. I'll explain to you why that matters. And I'll explain what this means fading the entry and the thought process of the position size that we put on. Okay, so coming into this here, let's first take a look at the screen. This is a kind of an analysis chart here, the 4 hour. This is your 15-minute to kind of give you an entry. These are the options that I'm in. And this is the SPY ETF. Okay, so the reason we use the SPY, for those of you guys new to this channel, I've been doing this for 2 decades. We don't necessarily believe in indicators, technical indicators. We look at different market fundamentals or contexts. Okay, so the SPY this morning has had a pretty big move so far. On this, it's starting to pull back and trying to trade sideways. And with that, it's obviously dragging down Meta because there is a correlation between, again, SPY and Meta because of the holdings of the SPY. Okay, so I'm watching all of this together. We pay attention to the momentum, obviously momentum monitor, with the overall market as well as Meta, which is what we're trading here. So let's get to the notes here and talk about the first key point that got us into the trade to even tell us, hey, why are you even looking to get short this in the first place? Okay, so the momentum monitor, the notes from this week. Let's just kind of read through them here. Meta remains in a zone where the odds of sideways chop and selling are higher than usual. It was like that last week. For those who have the price action training, then you know why. This makes the stock prone to chop or selling this week unless 605, I'm sorry, I should say 610, unless 610 breaks, okay? So coming into this week, this is something we use to tell us ahead of time so that we're not scanning for stocks in the pre-market, so that we're not looking at news trading, taking tips on impulse. This allows us to come into the market each and every week and say, okay, I already know where I want to pay attention to certain names in certain zones. So as I get to those zones, all I'm doing is kind of acting as like an analyst, paying attention to the price action until I get an entry trigger. Okay, so looking at Meta here, let's just analyze it on the 4 hour first, and we'll go to the entry chart in a second. Last week it came into the zone, it kind of chopped around, chopped around again today. This morning, pre-market it pulled higher. Some will call this a bull trap, which there's nothing wrong with that. Again, it sucks people in and then it reverses on you pretty hard. And this is why we were looking this morning to not get sucked into a long, but rather to come in and say, look, this might be a short position instead. Okay. In our world of trading, I'm going to give you the next kind of note you saw there. It's called outside day reversal. What does that actually mean? I'm going to explain it to you here now. Okay. So this white level you're seeing here is the prior high of day. This is a prior low of day. Okay. In a very simplistic perspective of auction theory, or if you view the markets, if you believe in the every asset is an auction, auction prices took this higher this morning. Okay, now if this breaks, this means it's an outside day reversal, meaning again this opened up above yesterday's range. Okay, so that's obviously bullish. Okay, most people will see that. The day traders can scalp this. But again, we came into this week with the notion that this whole area would be sellers. Okay, so if this reverses and it closes below 591, we would consider an outside day reversal. Okay, a trap. Okay, but instead of waiting for this to confirm and to trade to that, to be like, hey, look, here's my entry trigger to say, hey, now I'm ready to short this. We took a fade. Essentially, in trading terms, fading the entry means you're just getting in early, assuming that again, this is going to continue to trade lower. Okay, so let's go to the position. I'll explain to you number 4 here in a second. Again, this is some of the options that I have here, the options that I selected to use because I only expect this to be maybe a 1-day hold, maybe it's a hold into tomorrow. I don't know, it just depends, and I'll walk you through the thought process in a second. But these are the options that expire in 4 days. Again, with a little bit out of the money on them because, again, on the analysis perspective, I think if it drops, it's going to drop pretty hard. And I have a relatively small position on here. Okay, so from a cost perspective, if you look at this, I have 2 of these at a cost of 75, so that's 150, and then I have 3 of these at a cost of 147. Let's just call it 150. So 150 times 3 What's that? 450. So my total risk on this is about $600 on this position. Okay. So if this position continues to work, I might add into this risk and bring it up to, let's say, for example, $1,000 risk limit. Okay. So something that we use in our models, again, every trader is different, is you use something called value at risk or your entire risk model. Okay. So if I believe this position is going to continue to go, I might go in and add more of these contracts and bring it up to full risk. Okay. Now the reason I didn't, and this might be complex, but again, I want to explain it to you guys in this video, is as it gets to this particular level, let's say, for example, as we get to previous high a day, this is where another trading and risk decision is made. Okay. The first risk decision on this was made to fade the entry here. Okay. Now that decision was made before the markets open over the weekend because we understood that the likelihood of price action trading sideways up here was elevated based on our analysis. Okay. So decision 1 was made to get into the position here. Decision 2, which is your next trading decision, comes at previous high a day. And that decision is very discretionary. And basically what you're going to start to look at and say is this: am I going to scale out of the position I have and book the gains? Okay, take that P&L, put it in the bank, call it a day, go do what I want to do, whatever. Or does the market sell off? Okay, let's say we start to get here and there's no sellers showing up. You can see it on the order flow and it starts to break down. Then I have a decision. Do I add into this position and go from $600 of risk to what I would consider a full-size position of $1,000? Okay, so that's the thought process on this particular trade. And that's, again, a few things going on. Number 1, analysis, entry trigger, and then your risk on the position. Okay. Every time you're taking a trade in the markets, typically, again, in our view of markets, this is how we look at things. The analysis is always done ahead of time. You wait for an entry trigger based on your analysis. Then you put on the risk, and then you decide how to manage that risk, whether it's taking profits at a level or adding into the position based on, again, as the trade changes, you can add into it. Now, obviously, there you go. It's kind of pulling lower now. This is also pulling back on the SPY. As it gets here, I'll start to pay attention, right? Because what if it really starts to sell off dramatically? And again, I have other analysis here. I think, if 588s break, 582 might be a level. So again, it's probably in my interest to really pay attention to this as I get level to level. Okay, so this is how we manage trades as well, is paying attention as it gets to a level and then making a decision. Do I scale out or do I add into a position? Okay. So hopefully this video helped you guys to conclude this. Again, all this analysis is done ahead of time. This would be considered outside day reversal. Again, the only reason we're looking for an outside day reversal is because we believe this area of price action was going to be an area where price went sideways and or began to start to reverse. And that's why we looked for this particular trade. Okay. If you guys have questions, comments, you guys can throw them below. Thanks for watching. I'll see you guys in the next video.